Okay, GoviEx, uranium, Africa focused. Disclaimers, let's get to the important stuff. Right, Africa focused. Main reason for that is that we can get things done in Africa. Permitting in Niger, for example, took all of 4 months. Getting our environmental impact assessment signed off took us 6 months. So things can get done, you can get on. These are governments that are heavily focused towards commodity GDP. Their commitment is to get mines up and going. The key for us as well, we have 2 fully permitted projects. This is all about the financial risk and rewards. We're not having to wait for governments to issue permits to go into construction, particularly in Niger. We've been working a lot on getting our project simplified, in the case of Niger, very much for the debt market. A very large resource already out there, but a lot of exploration upside. We turned our drill rigs off initially for exploration back in 2013, decided that we had long life projects already, no point in just expanding resource, let's focus on de-risking our projects. We have a third project, which is an exploration play in Mali. These are all mining jurisdictions. Niger has been producing uranium since the early 1970s. There is a track record for producing it. It's never missed a shipment out of there. It's recognized, particularly by the converters and the utilities, as a form of uranium that's accepted for conversion. Zambia, newer, but it is also being certified for transport of uranium from Kyla Carrier, so it already has in place all the government legislation required for the production and transshipment of uranium. Mali's further down that path, but at the moment as an exploration play, an early stage one. Just briefly on the market, we're looking at a lot stronger demand side. Anyone who reads the papers at the moment will see that there's an increasing number of stories about commitment towards green energy. More importantly, an increasing focus, even here in the UK, where talking about building a reactor a year for 7 years. If it comes off, I love it, but we'll see where that one goes to. But the emphasis is nuclear is now part of the anecdotal story. It's no longer something to hide. It is very much part of the play. Continue to be driven strongly out of the Asian market, but we're starting to see new areas, the small modular reactors becoming much more focused in the story. The use of nuclear in bulk shipping, desalination, hydrogen production. These are all areas that nuclear is now starting to see its energy usage play through. But the key at the moment is all about the fact that we do not meet demand. And that has been affected in a number of ways. Last year, we looked at about 120 million pounds of uranium mined, almost 190 million pounds of uranium consumed. The missing piece was coming either from utilities inventories or secondary supplies. Most of that secondary was coming out of Russia, predominantly in underfed material or government sales. What you've seen going into this year and even starting last year was a demand by the utilities for diversification of supply. That it was exacerbated in March, where you saw the riots in Kazakhstan. And then more importantly, from what's been going on in Ukraine, you're seeing the self-sanctioning of Russian material. Most Russian material, even Kazakh material, currently comes through the port of St. Petersburg. Some of it goes by rail straight out into China. St. Petersburg is becoming a big problem for shipment. Either shippers will not go there or the insurers will not insure the shipments that are coming out either. They don't have a big influence on the uranium market. Where they have a massive influence is on the enriched uranium market. 20% of all US material that's consumed in the reactors comes out of Russia enrichment. What you're then starting to see is self-sanctioning. People like Vattenfall in Sweden will no longer buy material from the Russians and are having to find a counter source for this in the enrichment market. So what you're seeing at the moment is a focus by the utilities on that back end in the market, the enriched product, the UF6, trying to find their short-term material. But they've gone quieter in the spot market. The other thing you've seen is that while people are uncertain about the market, uranium inventories at utilities 2 years ago were at 2 years. They're now down to 16 months. They're pulling down their inventories at the same time. They can only do that for for so long, it takes about 2 years to convert U3O8 into a fuel rod. So they're getting to the point where they need to contract out. We're seeing a lot of pressure from the US guys trying to understand where the new projects are. And that's where GoviEx sits. We are permitted. We can build our project with the right financial incentive and the structure going forward. So we start with our Nigerian project. One of its other big gains is it's right next to infrastructure. It's got power, it's got roads. More importantly, it's got people. 2 existing mines, one of them closed last year. The other one is due to close within the next decade. We run 100% local. Government is the other 20% shareholder. We did a PFS on this last year, showed it could cover a 50-50 debt to equity at a $55 uranium. We recently spiked at $63 on the spot market, contracts up around 50 at the moment, and expect that to go higher. We had one off-taker indicate that he certainly expects to be paying $60 by the end of the year for his uranium going forward. We're looking to finish a feasibility study off this quarter. We appointed Endeavour Financial to do our debt advisory. Their speciality tends to be Africa, particularly West Africa and East Africa. We appointed a head of marketing sales last year with 30 years of experience in uranium. So we're in conversation with all of the utilities in the US and in Europe and into the Arab states. They're all waiting for the FS to be able to price that debt going forward. Security of supply is the issue. If you look at any forward demand going forward from 2030, it just completely collapses as older projects end their life and need to be replaced. But you need, where that comes from is the issue. Then we have the Mutanga Project, a very simple open pit heap leach operation. A lot of upside potential on this, but the other one has 20 years of mine life. This currently is sitting with 11 years of mine life. We put out a PEA for it in 2017, even though we merged 2 projects together that had both previously gone to PFS. Started the infill drilling on one major deposit in there, which covers about half the resource. That showed that we can get it to indicated on the drill spacing we were looking at. Looking to finish that this year. Also get the metallurgical sample out so we can verify the previous 2 sets of metallurgical work that were done on these projects and take this one straight through to its final feasibility study. This is very much a low capital project as well. It's like an upside down ISR project. We're looking at Madaouela from a financing point of view. This time next year being financed. We're looking at Madaouela 2050 going into production, our estimate at the moment. Mutanga would then follow it in about 2 years after. Subject to our ability to go any faster, we would push it faster, but 2027 would be a good place for that. Then we have the Falea Project. This is a uranium project. However, it happens to sit on 2 large gold trends in Mali, right on the west side of Mali as well. We've looked at it from a gold perspective. Clearly, it's coming through. But we also realize that the flat-lying sandstone, which is where we're sourcing the uranium, is between the Birimian, which drives most of the gold projects, and the laterite that's on the top. So we're drilling out these IP targets at the moment to try and understand where that mineralization is coming. We have core that the previous owners drilled through the sandstones, kept on drilling 20 or 30 meters down, but never assayed the bottom of them. The one core on the left is running at 5,000 ppm copper. So the question is, where is the real source of all of the precious metals and the uranium on this property? So that one we're doing and we'll announce as we're going forward. Restructured our board recently as well, making it much more debt focused, much more project development focused. We are sitting with a big chunk of cash at the moment as well, but we will need to raise some cash as the market gets more, we get more aggressive on our projects and demand more from them. Valuation, we're trading at a peer, but what I'd say in this market, if you looked at previous cycles, the companies that have outperformed either have built brand new projects and first builds. Look at the 2007 cycle where you saw Paladin and Energy Fuels, or in the 2011 cycle with the takeouts. And most of those takeouts were African projects being taken out. So GoviEx development project, we love the market. We've got the asset. We've got the permits that are key. The uranium market's there for us to finance into it. Hopefully, come the end of the FS, we'll be the next one moving towards development. Thank you.